Hello traders. Well, you might have heard about volume weighted average price. You would not know how to use this. This is an excellent strategy if you are a day trader or probably even if you are a swing trader and you want one strategy which can make you money consistently. Now, understand this. You are not supposed to use this indicator alone. It has to be used in conjunction with probably a price action and a volume and candles as well. So no strategy in itself is completely foolproof or loss proof, as I would say. So VWAP is an excellent strategy if you want to make consistent returns. This strategy has yielded me good returns till date. The profits, whatever you are seeing month on month on my profit and loss statement, I regularly use volume weighted average price as one of the indicators when I sit for intraday trading. So if this interests you and if you want to learn this strategy, I will tell you step by step how to use it, what is the drawback and what should be the entry, what must be the stop loss, and what things you must be doing. And by the end of the session, you would understand how to use VWAP more effectively. So VWAP, as it says, it's a volume weighted average price. So what is VWAP? So VWAP is an average traded price weighted by volume throughout the trading session. Now it tells you where the majority of the money has actually changed hands. Now, institutions usually monitor the VWAP and they use it regularly. So this puts you ahead of the retail traders automatically. So VWAP is an important tool even for the institutional traders. Now, what is the key distinction between the moving average VWAP is that VWAP is dynamic in nature, resets every trading day. It is not a lagging indicator carried over from the previous sessions. Now it is a live session specific benchmark that institution used to evaluate execution quality. So VWAP, it takes into account cumulative price and the volume plus divided by the cumulative volume. You don't have to learn the formula, but let me give it to you. So why VWAP works is that it is dynamic in nature because the support and resistance varies throughout the day. So VWAP acts as a self-adjusting level that price respects throughout the session. Few portions of it I'll be doing theory and then we will shift to the candles in the trading terminal and then I will gonna explain you step by step. Unlike the static horizontal levels, it moves with volume flow. Now what happens is that the price, if the price is above the VWAP signal, it indicates a buy and the buyers are in control. If the price is below the VWAP signal, it indicates probably you are more good if you take the short positions. That's what it happens. So large funds, institutional benchmark, it's an institutional benchmark. Large fund houses use VWAP to measure the execution quality. When price returns to VWAP, institutions often defend it, creating a high probability trade setups. So when you are following this strategy, make sure that you do a paper testing for few days, only then try to implement it. Probably 10 sessions of paper trading with strict risk management and then you implement it. Now let us understand how to use this VWAP volume weighted moving average volume weighted average price on a trading view. This is a trading view application what you are able to see, and this is a 5-minute candle. If you want to change it to a 15-minute candle, we could do so that the signals becomes less and the fall signals also reduces. Now what I have done is VWAP, if you can check to FX indicators and then just put function indicators, and then either you can use anchored VWAP with bands, or I would suggest you to just simply use a VWAP. This is what I have selected, and what you see here, the VWAP what I have indicated is black in color. Now whenever there are two rules to follow when you are using a volume weighted average price, and my trading setup, when I say use VWAP along with a moving average crossover, that is double crossover, that is EMA 9 and EMA 21, exponential moving average 9 and 21. What you are seeing is EMA 9 and 21 as well. Now this VWAP is indicated by black in color, and 9 and 21 EMA is indicated by 21 is a slow moving average which is indicated by red, and then a fast moving average 9 which is indicated as blue. If we just talk about the simple basic principle of using a double EMA crossover, now what we generally say is that if these slow moving average, that this is slow, if it is below the if this is fast, if this is below the slow moving average, you need to take short positions, or at least avoid going long in the market. Now this is one rule. Vice versa, if say suppose this is above, for example in this case, see here, the fast moving average is above the slow moving average, that is the green line is, the blue line is above the red line, we try to take a long positions in the market. Now couple this with VWAP. Now what is the basic rule for volume weighted average price is that if the price, this is a Nifty index, I have taken 5-minute candle, what you can see is that if the price is above the VWAP, that is this black line, you need to take long positions. Now, but when do you enter the long position? You need to enter a position, say suppose this, the market has moved here. Once it comes, retraces back to the same VWAP line, then you can take an entry, then you can take a long position. What should be your stop loss? Stop loss ideally should be just below this, ideally 1 to 2% of your capital. That should be your stop loss. Now you can trade in Nifty, you can trade in Bank Nifty, or you can trade in Sensex, or any particular stock also you can use it, or in fact even you can use it in commodity trading as well, or even FX trading, forex trading as well. Now what happens here is that whenever the price has moved above, the price is above the volume weighted averages price, it comes back again. This is the price, this is the place where you take the entry. Now couple this with EMA as well, exponential moving average. This is there, okay, fine. You see, check the volume has to increase. It has touched here, there is a rejection, it will not go down, it is bouncing back. Check the volume is increasing, and then 9 EMA is above the 21 exponential moving average. VWAP is also indicating bullishness, then probably you can take a trade. Now no matter how good the strategy is, it is bound to fall. Now what is the one thing which you need to avoid is that when VWAP is touching this line repeatedly, now probably I will just shift to 5 minutes and I will show you what has happened. So the day I am recording is 9th of July, and this is a classic example. See here, let me expand this. It touched here, came here, touched here, came here. When such a thing happens, then probably you don't have to trade the VWAP, at least avoid for that particular day. It has been touching too many times, probably it might not sustain. That's what it means. And then the market fell from here. But this, in fact, 9 and 21 exponential moving average also, they were repeated crossovers. There was no clear signal that particular day in the market. So this is how you are supposed to use the VWAP. Now what happens if there is a bearish signal? The bearish signal is very simple. The VWAP is here, the price is below the volume weighted average price, this line, and then the slow moving line is above the fast moving line. The 21 EMA is above the 9 EMA. Then obviously you have to take a short position. Probably suppose even now in here, which is very close to the VWAP, it never came to the VWAP. This is of 8th July when the US had US had overturned the ceasefire with Iran, and then they started attacking. This is what happened. The price didn't even come to the VWAP for you to take an entry position, and it just kept on failing and just kept on falling. Now this is how you use the volume weighted average price. Now let us go back and I will just again structure it to you so that you can make note of it, so that you can use it in your daily trades. We have seen the context of the market. You just trade only with the VWAP direction. Don't take a contra direction. That is, if the price is above the volume weighted average price, wait for it to bounce, come back to the VWAP line, and then probably you can take a long position. Now understand this, most of the institutions do follow the VWAP, so it would give you an edge over the retail traders automatically. Avoid trades when price keep crossing the VWAP repeatedly. I have told you that signals are range bound with no directional control, clear directional control. Now this is the bullish step which I have already explained it to you. Price above VWAP, bullishness. 9 EMA above the 21 EMA, again bullishness. Pull back to VWAP on declining volume. Whenever the pullback is happening, the volume should decrease, and then when the bounce happens, the volume must increase. bullish rejection candle plus the entry. Look for a bullish rejection candle, for example, pin bar or engulfing candle, and then forming near VWAP and enter above the signal candle. Now, what should be the place stop loss? Place just below the VWAP line. Ideally, 1 to 2% of your invested capital. That should be your stop loss. Now, the same thing you need to set it up for bearishness as well. Now, how do you set up a bearish? That is, you are going short in the market, or probably you are selling, you are writing calls, or you are buying puts. Either of the two. Price is below VWAP, volume weighted average price. 9 EMA is below the 21 EMA. That is, a fast moving average is below the slow moving average. It shows the downward momentum, and rally into VWAP on weak volume. That is, when the price is trying to reach from below the VWAP line, again there is a weak volume, and then once it fails, there is a rejection in the VWAP line itself, then it comes down. Bearish rejection candle plus the entry, and again the stop loss would be 1 to 2% of your this one. So volume confirmation is most important. Price stays away from the VWAP with expanding volume. This confirms institutional participation and directional conviction. These are the highest quality trade environments. Trends that hold away from VWAP tend to continue. So weak trending signal, probably it is not supported by volume or too many crossovers, then probably you might have to think twice whether you need to use. So that's the reason I always tell you, use this strategy in conjunction with the EMA as well. So there is, and the price action also you can include, and you can check the candles as well, but only keep to 2 or 3, because too much if you add, analysis results in paralysis. So risk management rules is that 1 to 2% maximum risk per trade, because you have only control over the risk, not on the profits. Minimum risk reward ratio must always be 1:2, because it so happens that what if probably like 2 to 3 trades go wrong, it hits your stop loss, and then one trade should be able to cover the stop losses as well. Put the EMA 9 EMA as a trailing stop loss. Trail your stop loss using the 9 EMA or swing structure, or lock in the profits. Or you can, ideally what I do when I sit for trading is that I use the 9 EMA and 21 EMA for a bullish signal, VWAP around that line. And generally I put, if it's a Sensex, I put about 60 points. That would be my stop loss. If Nifty, I put 25 points. Accordingly, you can check for any stock. Ideally 1 to 2% must be your stop loss. Don't deviate from that. Common mistakes to avoid. Now, every VWAP you can't trade. Touch or go, you can't trade. So understand all the confirmation criteria. For example, 9 EMA, 21 EMA, probably you check for the support and resistance candles as well, and then only you can trade. Ignoring higher time frame trend. Now, VWAP setup against the higher time frame trend is a lower probability rate. So always check the daily and the weekly context before executing. Now, whenever I tell you to take an intraday trade, the entry time will always be 5 minutes, and then you need to do analysis for 3 periods higher than this. That is 15 minutes, 30 minutes, and 1 hour. That's how you check the trend, and you take an execute a trade at the 5 minute. That would be your entry. Trading during lunchtime, during 12:30. Usually what happens is that in the market 12 to 1:30, or at least 12:30 to 1:30, the volume will be thin. So trade carefully at that time. It results in choppy sessions as well. Entering without a confirmation candle. Don't enter. You have seen that the price coming down. Say suppose it's a bullish market. The price is above the VWAP. The price is coming down to the VWAP itself, but the volume is higher. The volume has to reduce when it is coming down, because there is lack of interest when there are not many people who are shorting. But once there is a bounce, it has to increase with volume. So always see this, and always check the candles which are bullish or bearish candles, whatever positions you are going to take. Key takeaways. One is that wait for the confirmation. Don't take even if it is a VWAP, volume weighted average price, don't trade in isolation. Manage your risk and stay disciplined. If you are following one strategy, stick to it. There is no need to change the strategy every now and then. That is not needed. Your risk management is the key. Strategy, probably I would give it, even if I give a weightage of 40%, 60%, what happens is the risk management. So I use this strategy and I have been quite successful of late, and I thought that this would benefit you as well. Volume weighted average price. If you have been watching this video till now, I would request you to subscribe, and also put in your comment if you find this video informative, and share it with your friends who are struggling to find a strategy of trading intraday. You have wonderful trading days ahead. Bye bye.